That refresh you've been putting off until the right deal came along? It's here! Wayfair's Black Friday and July sale is happening now, so you can finally get the style you've been waiting for less. Get up to 80% off area rugs and up to 60% off outdoor and bedroom furniture. Shop Wayfair's huge selection of styles and find the piece to fit your style, budget, and space. Plus, free shipping. Black Friday in July ends July 27th. Shop today at wayfair.com.
Wayfair, every style, every home.
This is Real Estate This Week with Stephen Gasque. 17 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there, just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm delighted you're here as we look at how to invest in real estate without becoming a landlord. That's right, investing, but you don't own a piece of property. There's no tenant, no mortgage, and no keys. How do you do that? The answer is REITs, Real Estate Investment Trusts. And joining us now is an expert in REITs. Cynthia Shelton is the Senior Managing Director of the Investments and Capital Markets Division at LQ Commercial Group Real Estate, located all over Florida. She's also the former president of the Florida Realtors and the past president of the Certified Commercial Investment Member Institute, known as the CCIM. Cynthia is also the recipient of the National Association of Realtors' highest honor, its Distinguished Service Award. Cynthia, welcome to Real Estate This Week.
Thank you, and I'm looking forward to chatting with you.
I am so glad you're here because this is such a fascinating topic. How to invest in real estate without being a landlord, using real estate investment trusts. Cynthia, to begin with, can you give someone who has no idea what a REIT is a little primer on how it works and what it means to them?
Sure. A REIT stands for Real Estate Investment Trust. It's a company that is usually public on the New York Stock Exchange or one of the stocks. There are private REITs, but I'm going to talk mainly about more of the public side. And the public REITs buy assets, real estate assets of all types, and lease them or sell them or upgrade them and pay to the people who want to buy stock in that company dividends. So it's a great opportunity because they have to pay, by the way, 90% of their taxable income out to their shareholders. So it's a great opportunity to look into it. If you're thinking about it, they're a great place to work. I work for one, and they have certain rules they have to abide by. But if you Google REITs, you'll get all kinds of comments and questions and thoughts that will help you.
I see. So to put what you just said in very sort of kitchen table terms, you are investing in real estate, but instead of buying property and being a landlord, you are investing in a company that buys properties, and it's just like stock.
100%. And the best thing ever is you can track them because they don't sell the properties very often. And you're not having to manage them, or you're not having to deal with the building going vacant. You're owning it like, yes, I own real estate, but I buy it in stock wise. And so I get paid dividends, how the company's doing with all their properties. And I can look and see what they're buying and how they're doing.
And like most stocks, you can probably roll those dividends over.
Yes, you can do it either way. You can roll them over to keep investing, or you can have them distribute to you normally quarterly. A few may do monthly, but not many.
This is so interesting. And so let's walk through it starting at the very beginning and compare a real estate investment trust to actually buying a piece of property and being a landlord. So if I wanted to invest in real estate and I went the landlord route, first of all, I'd have to have a down payment, which we know for investment property is typically higher than it would be for a residential purchase, correct?
Yes, it's quite a bit higher. Like you can do residential for sometimes 10% down, maybe 20. Commercial, you're looking at 40% down on average, maybe 30. Every now and then, if you're lucky and you've worked with the bank, they may give you 20% down, 80% loan. But at the end of the day, usually it's about you have to put 30 to 40% down on the investment.
I see. So if you're buying just a starter home for like $300,000, for a down payment, not even counting the closing costs, you'd have to have between $9,000 and $12,000 in your pocket just to do it. Now,
Yes.
how does that compare to a REIT? Say that you only have 1,000 or maybe 2,000 or maybe 500. You can still jump in.
Yes, you can jump in at anything. For instance, I was looking up a few before we talked. I won't mention names, but one of them was $45 a share, there, give or take a little bit. So if you want to look at it that way, how many shares could you buy with $9,000 or $10,000 or $1,000 or $500? They don't limit you. You could buy one share if you wanted to.
Interesting. Well, Cynthia, as we know, residential property tends to grow in value over the years. Now, I know we can't promise this to anyone, but do REITs tend to also grow in value over the years?
Yes, because if you think about it, it could be a McDonald's or Chick-fil-A, and what happens is, let's say they signed a 20-year lease. Usually you have bumps either every year or every 5 years in the rent. So the rent's going to go up. So as that property, forgetting the value, just the base rent goes up. So you're going to get more income into the REIT, which means you get more, stocks go up, and dividends are paying better. Plus, as the market shifts, we all know just because residential went up, usually commercial follows that in many markets. So the value, if you paid $1 million for a shopping center, and 5 years from now, it could be worth $2 million. It could be worth $1.5 million. It depends on what you did to get there.
And you just mentioned a couple of restaurants, which brings to mind that many REITs have specialties. Can you explain that?
Oh, yeah. The specialties of the REIT that I work for, and it's NNN is the ticker symbol. And if you look them up, they only buy single tenant net lease properties, mainly just retail. So they focus on retail properties and single tenant.
Cynthia, a single tenant net lease property. What is
Yes.
that?
That means it's the McDonald's standing by itself without
Oh,
tenants
okay.
connecting to it. That's good. Thank you.
I always learn things from you.
I love it.
Some REITs do restaurants, some REITs do hospital buildings, some REITs do retail. It's all over the map, correct?
Right. And usually the restaurants are considered part of the retail. But the other side of that is office or industrial or multifamily. Or some of them buy land and hold it. Not many, but some do, because they're trying to buy income-producing properties.
And since you mentioned office buildings, a little reality check, Cynthia. When so many people were working at home and so many offices were vacant, did REITs that represent office buildings take a beating?
Yes. And when they take a beating, their stock goes down in value, and usually so does your dividend. But if you wanted, you could sell and go to another REIT. That's the best thing, besides getting the dividends, is you're not committed to staying there. You can sell it tomorrow if you wanted to. So let's
I
say
see.
it doubles in value since you bought it, the stock value. You can sell it and go do something else. Or you can hold it. Or if it starts dropping and you think, okay, now it's time to sell because I know they're struggling a little bit. I'm going to sell and get out now.
I see. I see. And again, comparing a REIT to buying property that you rent out. Now, if you buy that property and you have a mortgage, you really need a tenant because that tenant will help you pay the mortgage. You'll also have property taxes, and they can go up, so can insurance premiums. Now, none of that is a concern with a REIT because once you buy your shares, you can just put it in a drawer and forget about it, and it'll keep chugging away year after year.
That's the best thing, I think, personally, about a REIT, is you can buy, quote, stock. It's like buying a CD and keep it and watch it on the stock exchange and see how they're doing. But you don't have to do anything with it. In fact, I've owned houses that I've rented out. And those houses, people left me and they left it a mess. And I had to clean it up and do all that stuff or hire it done. If you own stock in a REIT, you're not doing that. You just have paper.
Right, right. And another thing that you just mentioned, of course, is that if you are a landlord, you have to do all those things. And it can be good because I'm a landlord too, and I get it. But you have to have time to do all those things. Whereas for a REIT, you don't have to invest any time at all.
None. And that's perfect analogy. And you don't have to put any more money into it unless you want to. And if you're a landlord, sometimes that means repairing, replacing, and doing things. Or like you mentioned, real estate taxes going up and insurance going up. If you've signed a lease that's just covering barely your mortgage, a little cash, and now all of a sudden your real estate taxes and insurance go up, now you're going to be barely breaking even maybe. So with the REIT, you put the money in and it stays that way, even though the values go up and down.
You know, Cynthia, you and I have been talking about REITs for more than a decade, and there's always one question I ask you, even though I've heard your answer many times. But it's a question I think many of our listeners will be having right now, which is, if you put the same amount of money into a REIT versus a physical brick and mortar property and waited 20 years, which one would make you richer?
Wow. You know what? I wish I had the answer to that because then I could have my crystal ball and it would tell us what we need to do and invest today, right?
That's
And
right.
since I do investment sales, I have clients like me personally that own stocks in REITs and own real estate. We look at doing some kind of a variety of, like, would you own a CD today at 2% or 3%? Or would you go buy stock? Or would you go buy real estate? It totally depends on your time available and the money you have to invest today. Which does that mean 20 years it's going to be worth double if I own the real estate versus the stock? Who knows? Because the stock market has gone up and down crazy. And so I have found over the years that my real estate made me money. Yes, buying it and owning it, but it was a pain sometimes. The stock has never been a pain to me. It's just tracking to see when I want to sell it. And so I make just as much almost in my stocks in REITs as I do buying real estate over time.
Oh, Cynthia, this is great. And now we've pretty much explained what a real estate investment trust is and the options you have. You can get a medical building REIT, you can get an office building REIT, you can get a retail REIT, and what it means to get in the game and to stay in the game. But let me ask you this. If one of our listeners is interested in finding out about REITs and maybe going for it, where do they go and how do they do it?
I would recommend first, if they don't understand it, to Google REITs, REITs, and look at the Q&A and comments. And I did it today because it'd been a while. And I'm blown away with some of the things they're telling, which is good. It's an education in itself. But what happens is then after you've done that, you say, okay, what type of REIT do I want to invest in? Do I want one that's doing, and I'll give you an example, sit-down restaurants, which are struggling right now. And sit-down restaurants, many of them are closing. It doesn't hurt to think, what is expanding more? Is it multifamily? Is it retail REITs in general? Would you invest in a REIT that does only office? Well, not unless they're converting them to residential units. So you want to find out about that company and are they investing in things for the future? Because today, some of them are going to be struggling a little bit and starting to sell properties off.
And of course, anyone who's interested in getting a REIT can either try to do it themselves or they can get someone who will give them financial advice and guidance when they make their purchase.
Absolutely. I won't mention any names, but some of your wealth companies or financial advisors do that. And they'll say, okay, you can put so much money into stocks right now, and here's where I would go. Or let's buy some CDs or whatever. So find out a financial advisor then that would lead you into a variety, not just one lane.
That's very wise. Income streams, not just one income stream, but multiple income streams.
Right.
And Cynthia, I'd like to leave you with one thought that anyone who has invested in physical real estate would certainly understand, but something that someone who's only invested in REITs would have never experienced, which is the 1 a.m. call from your tenant saying, I lost the keys and I have to get in.
I love it. You're 100% right, because what happens, and it's happened to me and it's happened to you and others that are listening to this, is there's always something that comes up on a holiday or on like in the middle of the night, and or there's some issue that you didn't realize you would have to deal with, like evicting a tenant, which is a nightmare, and trying to take over the property again, versus owning stock. And I don't even think about my stock. Every now and then, once a week, once a month, I'll start looking and saying, okay, where is all of this invested and how are they doing? But that's it. It's not going to call me in the middle of the night to tell me that.
I've had that happen so many times I can't count them. But I really want to thank you for joining us on the show today and telling us all about real estate investment trusts, a way to invest in real estate without being a landlord. And as always, you explain it so well. Cynthia, thank you.
Thank you for asking me, and hopefully it'll be helpful to someone out there to go make some money.
Absolutely. Cynthia Shelton, Senior Managing Director of the Investments and Capital Markets Division at LQ Commercial Group Real Estate, located in Florida. The former president of the Florida Realtors and the past president of the Certified Commercial Investment Member Institute, the CCIM. Cynthia is also the recipient of the National Association of Realtors' highest honor, its Distinguished Service Award. Next time on Real Estate This Week, why get a one-size-fits-all home loan when a custom mortgage might be better for you? Mortgage alternatives, next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every weekend, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.
Marketing is hard. But I'll tell you a little secret. It doesn't have to be. Let me point something out. You're listening to a podcast right now, and it's great. You love the host. You seek it out and download it. You listen to it while driving, working out, cooking, even going to the bathroom. Podcasts are a pretty close companion. And this is a podcast ad. Did I get your attention? You can reach great listeners like yourself with podcast advertising from Libsyn Ads. Choose from hundreds of top podcasts offering host endorsements, or run a pre-produced ad like this one across thousands of shows to reach your target audience in their favorite podcasts with Libsyn Ads. Go to libsynads.com, that's LIBSYN, ads.com today.